So we're recording now, which is good. Yeah, so Trump's got the that $100,000 a month early access to the Truth Social post. Yeah, there you go. Look, thanks for sharing. So Trump Media officially launches paid service offering faster access to President Trump's Truth Social posts. Now, I'm gonna just tell you guys something. It's not guaranteed. I may have access to that. I'm not going to tell you how. I'm not going to go into any details. I'm not confirming it yet, but I may have access to that somehow. If I do have access to that somehow, I will definitely be sharing it. But it is such a premium thing that it might have to only be shared in the premium group. But no confirmation on that yet. It's just I may have access. Okay, so I'm just telling you guys not to create any sort of FOMO or anything. I don't even know how it will look like if I were to have access, but I may. Okay, so I'll just leave it at that. No confirmation. Oh, I wish, Tracy. I wish. But you know what? I if I was banking $100K a month like that, I don't know. Would I be streaming? Really, would I be streaming? I don't know. I'd probably be on a yacht or something, right? Anyways, let's jump into the talk for today. Yeah, you may have an insider, maybe, but don't tell anybody. Okay, so today the plan is to talk about the market open, what that looked like. I know Matt went long today. Looked like there was a CISD entry. We can also talk about non-singular setups versus singular setups and what that means. I often use that terminology. And there's two ways to look at it. And we'll also take a look at the daily EQ and the importance of that. Vidal, what's up? Congrats on the payout, brother. Mike, what's up? No problem, Likith. We'll see you later. But yeah, we'll talk about the DEQ and also NQ and ES. So a lot of this stuff will just kind of be talked about in some sort of an amalgamated way. It's not like a specific thing, but these are kind of some things I wanted to talk about. Like I said, it will be amalgamated most likely as we talk about the market. If you have questions, drop it into the chat. I'll do my best to answer them. I have the chat up, so I will see it. As you guys know, I trade IFEGs. I don't trade it exactly like other people do, but I do have a process. So I'll quickly just go right to the beginning of this market. So when I show up to the market every day, the first thing I'm looking at is two things. The first thing is, where is price in relationship to the DEQ? Now, why am I looking at the DEQ? The DEQ, daily EQ, is the way I determine if price is trading inside of a premium or if it's trading inside of a discounted area. So if it's trading below the DEQ, which is a discount, I'm looking for longs, if it's trading above, I'm looking for, it's in premium, so I'm looking for shorts. And what I'm going to do is try to align buy-side liquidity or sell-side liquidity with premium and discount. So buy-side liquidity being in premium, London high, Asia high, previous daily high, and anything in discount, which would be below the line, typically would be like, Asia low or London low or previous daily low, but also could be hourly or H4 ERLs, so sell side liquidity. And then on the premium side, it could be H1, H4 buy side liquidity. So I'm looking at those things when I'm looking to put a trade together. But that's the first thing I'm looking at. Where's price trading in relationship to the DEQ? The second thing I'm looking at, which I've started to do more recently because the indicator, we all use. Amy, what's going on? Thanks for being here. The indicator that we were using, pretty much all of us are using this. ICT kill zones and pivots, TFO. this thing got an update. So trader for I think it's op for opportunity. If you go look up on Twitter, you'll see it, trader for opportunity. But the finally did an update on this thing, and I got to tell you, I really like the update. And a big thing that I'm taking away from the update is this chart here. And the reason I like this chart is because it's a daily range chart. It's brilliant because now I can immediately see what happened in the overnight sessions, and it's so important to know what happened overnight, because if Asia had like a 500-point move and London maybe continued it, or maybe it kind of slowed down, we can typically start to anticipate that New York is going to slow down. It's going to consolidate. However, on the other side, if Asia has a very tight range, like we had today, 160 points, London had a tight range, 189 points. What that means is we can then start to anticipate that New York's going to have some sort of explosive move, right? So I'm always looking to see what that overnight range looks like, and having the stats down there with the ranges it just makes my life so much easier. So if I just hit X, you'll notice here it also has percentages, and it's actually pretty cool too, because it's giving you a percentage of the hit rate over the past previous sessions, right? In this case, it's over the last 11 sessions. So it's telling you what percentage of the time London high gets taken out when you're in New York, right? And it's showing 91%. And what's really funny, because we all know what happened, is that London high ends up getting tagged right here. And Asia had a 64% chance, right? But using those kinds of stats can also help in understanding where the drawn liquidity is and why price could move to that drawn liquidity. So super cool feature. If you don't have the indicator, like I said, it's free. I believe most of you have it. I feel like every trader has this one. So it's ICT Kill Zones and Pivots by TFO, Trader for Opportunity. So shout out to him. But let's go back to what happened today. So at market open, this is what we're looking at. Now Tracy's saying you stop having to mark the H1 lines with that update on the Kill Zones indicator. Does it actually mark off H1 lines too? I didn't know that. Or am I mistaken? For some reason, I still like to manually do these things. I don't know why. I think some things I just don't trust indicators to do a good job of. But that's just me. Let's go to the hourly. And what I'm going to do is most of the pivots align with the hourly. Yeah, that's true. That's true. So, I'm marking off hourly levels. So there's one right here. I could mark 4-hour levels as well. But the point is that I'm going to just start to mark off some key levels here. I'm basically looking at swing points, right? So you can see I'm just quickly marking these off. If I go to the 4-hour, we can kind of really start to see which ones are actually 4 hours. So this one right here is 4-hour. This one right here is a 4-hour. And then what I'll do is I'll drop to the 15. And the reason I drop to the 15 is then I start to, and it's exactly what Tracy said, right? These pivots usually align with H1 or H4 lines to begin with, ERLs to begin with. Like this one, for example, is already previous daily high. So I'll just mark this off more accordingly to what it is. This one that I marked off here is actually Asia high, right? So the reason I do this, though, it's a good exercise for me personally. It also allows me to know if the Asia high or London high is an H1 level or an H4 level. I think it's really, really important to understand or to know that, hey, London high today is an H4 level, because sometimes London high or Asia high or one of these overnight session highs or lows might not actually even be a swing point. So it's really, really important to know that. Okay, so a little tip there. But this is what I'll do. I'll just mark off these lines. I have it on the 15-minute, and then essentially, you'll get something like this. Let me just pull this over here for a sec. So like this morning when I showed up to the charts, the first thing I do in terms of my posting is I'll share, let me see, where is it? Right here. This. So my chart literally looks like this, okay? So you got previous daily high, Asia high, London high. I have an hourly buy side liquidity level. I have an H1 sell side liquidity level. I got previous daily low here, and I have an hourly sell side liquidity level here. I got a couple other lines too that I use that I'm looking at. I'll talk about that maybe another day. But those are more confluence based in terms of zones. But this is basically it. I'm literally looking now for something to get swept so I can take action and look for like a V-shaped IFVG setup. That's literally all it is. Okay, so once I have that set up, the next thing we got to do is wait for market to open, which we get right there. So seeing how price opened and it started to dump, you have the H1 level right here. Okay, so clearly I need to see that thing get swept. Anything that's happening in here, I cannot be a part of, no matter what happens. And sometimes this is a problem. Sometimes it's not a problem because there's no setup. Things just move. But today was a tricky day because NQ started to reverse while it hadn't even swept any sort of key higher time frame liquidity that I was looking for. Right now, it did sweep a 15-minute level, sure, but I'm not using 15-minute levels unless that 15-minute level was like a London low. Then that's a different story. But because the 15-minute level was just a basic or straight up sell side liquidity level. I don't know why I put buy side here. That's incorrect. Sell side. There we go. Because that 15-minute level is just a sell side liquidity level. I wasn't interested in it. So the other thing we got to do, and I made note right here, is NQ-VES correlation, is we got to understand what ES is doing at the same time. So right here is the point of time that we're talking about, that open. And as you can see, we got London low here and we have Asia low here. Okay, I'm just going to scroll back so you can see, right? Asia and London. So as ES sweeps Asia and London, I'm thinking, okay, well, that's not good for NQ in terms of me getting the sweep down here. And this is where the FOMO starts, because you get a nice, beautiful V-shaped recovery, which is everything we want to see as IFVG traders, okay? But in terms of like NQ, it front runs sweeping the hourly sell side liquidity level. And because it front run that, I was literally just keeping my hands under my ass. Like I could not click. I did not want to take it. I was struggling. I was honestly struggling because I can't tell you how many times I've done this in the past and then I've been burned. And then I'm like, you like kind of slap yourself because you're like, why did I do that? I should never have done that in the first place. Oh, I'm Micah now. Thanks. I appreciate you, man. Appreciate you, brother. I know you're just joking around. Or typo. Yeah, exactly. So I'm getting front run on that level, and there's clear... what's up, Harry? What's going on? And, there's clear FOMO happening for me because I'm seeing this aggressive run higher. And this is the move I wanted. I wanted to be a part of this. When we go to New York Open, the key part of New York Open is a liquidity sweep, right? We want to see that manipulation immediately, and we want to catch that reversal, right? That is the classic ICT 930 move that we're looking for. The best trades typically are happening in between 930 and 1030, right? As time starts to move beyond that, things start to get a little less probable. Doesn't mean trade can't set up, but things get a little less probable. So watching this, I had to watch this thing go. And the thing with trading is when your setup is not there, don't force yourself into the trade because it can bite you in the ass. You got to just chill and wait because you know what A+ looks like for you and you got to just trade it, right? What's A+ for me might also not be A+ for you too, right? Or you to someone else. So also keep that in mind. But your data has to back that up. Okay, so for me, I had to see that sweep. I didn't see it. I've always said this, even if ES sweeps key levels and NQ doesn't, like I won't jump in that trade. I want to make sure NQ is sweeping levels before I do anything. So after it sweeps, I'm looking for the next objective, which is like I'm looking for the daily EQ to get swept. Okay, so because as we know, the DEQ can act as a very strong resistance level, like a support and resistance level, right? So as long as it rejects here, then there could be a potential setup. So let's just hit next. The problem now is we get a nice sweep here, okay? But the problem is that we have something that's known as non-singular setups. Non-singular setup is where you have no LRLR in the direction of where you want that trade to go. Okay, so that's one explanation behind the terminology of non-singular. Looking at the chart here, you can see it's just FEG, 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 right? Or gap, 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 imbalance, imbalance, imbalance. The problem is that even if this does confirm, you actually don't know where the reversal might happen. Like it could catch a bid right from here, it could catch a bid from here and go the other way. So, but if you have LRLR, we're talking about liquidity, right? And we know price is always drawn to liquidity. So if we hit next, right? Let me just put a quick line here. And remember, we're also playing probabilities here. We're not just pattern trading, right? Pattern trading is not what I'm doing. I'm looking for specific criteria to be met in a specific way. And then I execute on that set of principles or criteria that forms a system. So even though we get this move here, see that? And this is exactly what I'm talking about. So we have a clear IFEG, beautiful move off the DEQ. But if I'm front running this candle, if I'm even taking a bid right here, let's say my stop loss is, going above the DEQ here. Look at how many points that is. 75 points. You also got to look at the points. Okay, I didn't mention this in the whiteboard there, but looking at the points is very, very important. Okay, why is it very important? Because if you want to have risk set at 75 points, meaning my stop loss is 75 points, price has to move against me 75 points. You literally are saying that you need price to go in your direction for 75 points. Okay, just to get to 1R. And the thing with IFEG trading is we're looking for smaller, risk. We're looking for stop losses to be placed, 40 to 50 points roughly. I feel like for me, my best trades are 40 to 50 points in terms of the stop loss size, which then means that your IFEG has to be at least over 5 points to about maybe 30 or 40 points. This one's about 23 and a quarter, right? So your stop loss placement is huge in correlation to the IFEG sizing. Some people will place their stop loss just a little bit above, in this case above the IFEG. Some people will place it at a swing point, right? But remember, that's a 100-point stop loss. You would need price to move 100 points the opposite direction just to hit 1R. Is that the kind of trade you want to be in? For me personally, no. I want to be catching 1R trades that are moving 40 points, because for price to move 40 points on NQ during the New York session is a no-brainer. That happens every single day, right? So you always want to side yourself on the highest probability. So if the highest probability is that price always moves about 40 points minimum, I say minimum, but minimum is probably 200 points, right? You just need to catch a piece of that, okay? All it says, usually takes trades and moves it to break even at the FEG. It's true, that's part of how you would want to trade this, but the problem is there's no LR here, and let's just say this gap wasn't here, and this gap was here, and you had some LRLR here, right? This would then be attractive, okay? But how would you play that? Well, the way I would play it is, if I were to front run this candle on the entry, front running means that before the candle confirms, you're entering almost like chasing it, because you're seeing that there's very aggressive momentum confirming the IFEG. What that does is it gives you potentially a little bit more of a better position, but you got to be careful, right? Because it can still go back against you, and if you're full size down here and it goes back up to the top here, you're already in drawdown. So in these situations, you might want to do like a half size entry here and then see if it returns back to the IFEG, and then enter the full size there. But the thing with this is that I would immediately be moving my stop loss to break even the second you start to see liquidity being taken, like the drawn liquidity being taken, the nearest drawn liquidity being taken. The problem with this is that the second this IFEG confirms, it's already taking liquidity, right? So this is why when you have a non-singular setup, and they can still work, we all seen them work, right? Like, but it's not about taking that chance. It's about just steering yourself to the side of higher probability versus lower probability, right? Because here's an example where it didn't work, right? Because it's low probability, okay? So I hope that makes some sense. My average time on iFuture trades is 3 minutes. Do you mean like 3 minutes in terms of like duration? Like your trade time? Because I think you hold the record, right, bro? 14 seconds? 14 seconds. I still got to try to beat you, man. I got to try to beat you. One day, man. One day. But no FOMO. So this is why I skipped this trade. I didn't like it. Even though we're getting beautiful reactions off the DEQ, I just can't do it. Now, the other thing is with ES, right? Let's go back to ES for a sec. So let me just hit rewind right here. Okay. The thing with ES now is we're right about here. Okay. So when NQ, this is the DEQ is now here because the price has moved. It's dynamic, but it was originally like around like here, right? I'll just make a little line here. Okay. So this was like the DEQ. We look at what ES was doing. The thing with ES is that you always want to see what ES is doing and where its price is located when you're taking trades on NQ, or even the other way around, right? Because some of you probably trade ES too. Personally, for me, I don't trade ES. So when the market opens, price is aggressively moving into the DEQ right here, right? You see this nice rejection here. Make it a little bit bigger. So you see how it rejects right here at 934. If we go to the correlating candlestick, NQ's way down here, okay? So what that means is that when price starts to move up on NQ and tag the DEQ like it's DEQ, we got to immediately see what ES is doing, right? Is ES rejecting the daily EQ, or is it actually flipping it? And in this situation, while NQ is rejecting the DEQ, ES is actually flipping it and doing something that is uncorrelated to what NQ is doing. This is not a good sign. What this means is you don't want to even be considering shorting from around here. ES is flipping the DEQ. That means it's flipping a resistance line into support. Get out of your shorts, right? Anytime price is starting to move closer to the DEQ and you're in a trade with NQ, like ES is moving closer to the DEQ, you're in a long on NQ, even taking a long here, you got to be careful because anything can happen at that DEQ. You don't know. None of us have a crystal ball. Like, we have no idea this is going to be flipped. This could easily have been rejected. It just takes one, post from Trump for this thing to have some sort of a spike, and you're going to be on the wrong side of it. So you got to be very, very careful. In this situation, once again, ES sweeps the DEQ, NQ is rejecting it. What does this tell you? I'll put that out to you guys. What do you think this tells you if you start seeing ES flipping this into support, but NQ is rejecting it? Well, what do you think that tells you? Does anyone have an answer to that? If you don't, that's okay. I'll give you the answer. Upcoming chop, potentially, yeah. Especially if NQ maintains price action below its DEQ. But one thing we'll know is that ES was pumping out of the gates. Look at that reaction off London low, Asia low, V-shape, right? What does that tell you? It's telling you that ES is stronger than NQ. It's meaning that even though NQ is below the DEQ, you should be anticipating for price to go higher because ES is going to go higher. So if ES goes higher, it's going to pull NQ up. And that's exactly what happened today. So price started to pull, ES started to pull NQ up. And that's kind of the point of what I'm trying to make here. So this is like the value of understanding the DEQ. This is the value of understanding why you need to be looking at NQ and ES and make sure they're correlated. Because if we're taking shorts or longs on NQ, we want to make sure ES is also correlated, sweeping some sort of aligned level and making sure that it has enough space from where it is to where the DEQ is. Okay? So you hit X here. And we can just see the price, right? It's just ripping today. Okay, so at about 9:53, NQ finally breaks above that DEQ level, right? Let me just double check what time that was. 9:50. Let's go here. So as NQ finally breaks over the DEQ for it, look at how far up ES is already. It's leading the way. Okay, so that's my point. Keep an eye on both. Look at the ranges, right? Remember what I told you, right? Like if Asia and London are having very choppy ranges, expect an explosive move during New York, right? If I hit X here, I think NQ moved, yeah, NQ's at 490 points right now, right? So there you go. Good example. Now let's go back to NQ's single chart here. Let me get rid of this because that was the DEQ. And basically, if you get a trade set up, but it's going against the rules, don't take it. It's just not worth it, right? Wait for A+, right? Wait for something V-shaped. So waiting, there's nothing. When you start to get chopped like this is another thing I'll talk to you about with the DEQ, is that let's say it forms another type of IFVG inside of this chop. I've seen setups like this happen. I highly recommend do not touch it. Okay, you literally want to be taking trades on the first touch off the DEQ, meaning this right here. So if the setup's not forming off this first one, don't even bother. If price starts to accept above the DEQ in this situation and then start to close below, be careful because it might be flipping the DEQ into support. Okay, so chop, don't even bother trying to get faked out on taking a short in this situation if it forms. So what does that mean now? It means all I can do is wait for these levels. And that's the thing for trading is you have to just wait for your levels to get swept. And if your levels don't get swept, that means liquidity has not been taken. Don't do anything. Like, don't do anything. And sometimes that's going to happen. Remember, it's also Monday, right? Monday is usually not a good day to trade, ever. Very rarely will Monday be a good day to trade, from what I've seen. And today was like no example. It was another example of that. So let's just keep hitting play. Okay, so here again, we get a nice sweep. We have a strong, like a good reaction or strong reaction off the H1 level. But where are our FVGs? They're nowhere to be found, right? So you have these two little small gaps, right? I'd made note that they're there, but this is another non-singular setup. We don't know what's going to happen at any of these levels. In this situation, I'll jump to the 2-minute. I'll jump to the 3-minute. I'll go as far up to the 3-minute. That's the highest I'll go to see if I can find a clean IFVG trade. In this situation, though, even though there's a 3-minute FVG here, look at where the DEQ is. I don't want to be taking shorts into the daily EQ. I want to be taking shorts below, like sweeping the DEQ to go lower. But I don't want to take shorts moving into the DEQ because it could just bounce off as support. So here's the 2-minute. Same scenario, right? Couple of gaps, non-singular. Let's hit play, right? And look at what happens. It's the same story, right? It's the same story. So like, if I go back to, let me go back to this gap. So like, even if you were to have stacked these two up right here, okay, let's just stack them. Whoops. Okay, right there. Okay, so let's say your stop loss is like here, 40 points. 1R is about here. Does it tag 1R? Just misses it, right? And like I told you guys, for me, I love using like about 40 to 50 point stop loss. I feel comfortable with that. But even in this situation, that 40 point stop loss doesn't get me to a TP, right? If I have a tighter stop loss, I can potentially get to that 1R and take TP here. But this is part of that thing that Aldous was talking about in the chat, where he was saying that he might take trades like this, but the second price starts to move into that gap, that upcoming gap, stop loss goes to break even, right? So depending on where that stop loss placement is, you're either at break even right here off this candlestick, right here, at 10:05, or you've already taken your TP because price already moved in there. Either way, do you see how price is moving though? This happens because of the non-singularity of the setup, okay? Now another thing to talk about with terms of like non-singular is like if you have like a stacked set of IFEGs. So once again, I showed you how you had two IFEGs right here, right? Or two FEGs, excuse me. One small one here, one small one here. You put them together, it's stacked, right? That's also another way of saying like it's not a singular FEG, right? So you might hear that terminology too. So just wanted to kind of put that out there. But once again, not a good setup in my opinion. I wanted something clean. I wanted something where, you have LR here, but you have gap here. If it was flipped the other way, where you had all of this LR right here, and then the gaps below, that would be perfect. That would be perfect, because price loves to reach for LR. The problem with these gaps is that you don't know which one price is going to move off of. And like I said, you're shorting into the DEQ. You'd have to be taking TP somewhere around here. I personally would rather just waited. Why? Those reasons, but also look above. You got London high here, Asia high here, previous daily high here. You got three major levels to work with that could provide a very clean reversal. We've seen this happen many times. If you draw from your experience, then just be patient. You know why to be patient. So I just remained patient and I waited. Okay, so you get a sweep right there. Now look at this sweep. This is a very good example of price sweeping a very key level that we know of, but it's not having a good reaction off of it, right? It's not having a reaction like this, where this is kind of V-shaped, right? This had its own set of problems, but this doesn't have any sort of gap problems, right? It has LR here, but it doesn't have a gap problem. What it has is a reaction problem. And there's two reasons for this. One, you got liquidity up here. I personally play level to level, so it doesn't matter. If the setup formed here, I take it. If the setup failed and then another setup forms here, I take it. For me, I got my risk set to 2 trades. After 2 trades, if it's 2 losses, that's it. Count's locked up. Move on to the next day, right? Or I don't take that trade for whatever reason, right? If it doesn't look 100% what I want to see. And the other thing too is there's no gaps here. Can't work with anything. If I go to the 2 minute, you got a really small gap here. How many points is that? 3.25. I can't work with that, right? I can't work with a 3.25 gap. I need something bigger than that. 3 minute has a setup, but the problem with the 3 minute is you would need to see super strong momentum ripping through here, and you got to wait 3 minutes for that candle to close. So I'm watching these things, but the second we start moving higher, this 3 minute becomes unattractive, okay? Because now there could be new levels, new setups of interest, right? Like we had this 1 minute setup here. I was watching that. But then previous daily high gets swept. But I can still watch this, because if we see a strong V-shaped move the other way, you can ride that momentum. But you still need to wait for confirmations, right? So I had messaged in the chat, or in my chat, I said, hey, I'm watching this, right? So this was at 10:42 or so. Let's go to my thread, 10:42. And I'm trying my best to share as much as my thoughts into this thread. If you're not following it, daily trading under Trader Xkira, you can hit the follow button, and then you'll get you'll see kind of like a notification, like the thing lights up. If I tag Kira alerts, make sure you have that set, with your profile. You can get that set. I'll show you in a sec. But here was that 1042 setup, right? I'm watching this on the 1 minute. I really like the way this candle had swept that level, right? This is really good. We want to see these types of characteristics when we're taking shorts. But ultimately, you can have setups with projections as much as you want, but if the IFEG never confirms, then the setup is invalid or unconfirmed. Bond says he shorted this level. Sadly, it was a loss. Yeah, I'm sorry that was a loss for you, man. Why did you take that short? Oh, yes. I saw something else with that, too, right here. Because I've noticed, right, like you have the sweep. Dollar sign here. There's the sweep. Let me just back this up for a sec. Right, you got the sweep, which is very important for a CISD to have, of course. And then you have the CISD right here. And there's your entry right there, right? Presumably. Whoa, what the hell's going on here? 27 points. Not bad. Potentially at a protected swing. You got your first level right here. But guess what? Psych. Iman's in the house. What's up, brother? Yeah, so for me as an IVG trader, setup never confirmed, and this massive candle forms next, immediately telling me this trade's cooked. And it's crazy too, because we've swept London, we've swept Asia, we've even swept the previous daily high. And what does that tell you as a trader? If price keeps sweeping levels that are major levels and just like slice and dicing them, what does that tell you? It tells you that trying to short, like in this case, a bullish trend day, trying to short is highly risky. Why? Because we know that if price is going to reverse, it might fake out at one level, but it's most likely going to reverse at the next key level, right? But if you start seeing it slicing through all these levels, like, we know that should not be happening if we're looking for that reversal, and you got to be careful. You got to be careful. It's not to say price won't reverse at some point, right? Because whatever goes up got to come down, and what goes down got to go up. But it's just in terms of our window, right? 9:30 to 11. Like, do I really want to be trying to chase for trades outside of the kill zone? It becomes lower probability, and it's just not worth the stress, It takes a lot of time and effort just to get to this point and sit through this, right? I told you how I was experiencing FOMO. And for me personally, like, I'm no different than anyone else, right? Like, I want to be a part of this. But how do I be a part of this where it makes sense to me? And that's the problem, is that I couldn't find a way to be a part of this for it to make sense to me, because it's moving above the DEQ in the premium, sweeping higher time frame liquidity levels that I like. Overnight session, previous daily high. These are H4 levels. We remembered there were H4 levels up here? And it's just slicing them. So, if the setup doesn't form, you do nothing. Now, the next thing to talk about is what happens here. Okay? Because price still goes higher. And let me just mark off these levels. Okay? So you got an hourly there, and you got a 4-hour right here. So as price starts to sweep these levels now, the one thing we can tell, if I just go to ES for a sec, oops, let me go to, got the wrong thing here, NQ. Yeah, so if I go to ES, I believe had a 4-hour level right here. It had no liquidity to go after until about this level right here, from what I saw. Right? There's no liquidity up until here. So what that's telling me as a trader is it may front run sweeping this if NQ sweeps a key level. Sure, that happened down here, right? ES swept Asia and London low, and NQ was in the middle of nowhere and still reversed. The same thing can happen. It's just I want to make sure on NQ it sweeps a key level. So it's inching closer and closer to this level, and NQ is now swept very key levels again. Let me get rid of this thing. Don't need that anymore. And we have a setup right here. If I go to the 2 minute, it looks like it's the same setup. 3 minute becomes non-singular. If I go back to the 1 minute, this is more singular, right? You would just have to stack these. So I was watching this, but I will tell you, this is not what you want to see with IFEGs. They can still work. You can catch, like I said, I'm trying to just catch like 30 to 40 points. That's it. Even if it like goes 30 or 40 points and to retrace before it loads up to go long again, that's cool, right? You're still following the rules of sweeping from higher time frame liquidity. So I'm watching, but watch what happens here. Okay, so you have an M shape here. I think there was SMT, if I'm not mistaken, between this point and this point. It's not showing it, but I believe it was, right? So you have a high and a lower high, and then ES had a high and a higher high, right? You can see that there, right? High or higher high, higher high. But here's the problem. Here's the problem. Number one, we're outside of the kill zone. Okay. Number two, even though this is having bearish SMT off of a key level sweep, look at the amount of chop that's happening to get to that sweep. Is this a V shape? No, it's not. At some point, you have to kind of say to yourself, when is an IFEG lower probability? And in this situation, the more the price starts to chop around here, the less interested I'm going to get. Even though this candle moved aggressively lower, I was just not interested. And look at what happens. It reverses and it goes to stop loss. The difference is massive, right? Because I showed it actually here. Right here. I said, it was getting close to confirming, but it's choppy as fuck. Needs to see a strong displacement confirming the IFEG, otherwise that'll be it for me today. Feels like I'm forcing it. This is the FOMO thing coming in, right? As we know, the best setups have a good reaction from a key level, strong momentum confirming the IFEG, aka V-shaped. Good example was ES, right? When it swept. Look at how many candles it took to go the other way. This is what we want. We want to be on these, right? What we don't want is this. This is the NQ setup. See the difference? So trying to catch that short, you're hitting a stop loss. It's just lower probability. Okay? So covered quite a bit today. I tried to go at a pretty decent pace. Does anyone have any questions? Oh, it looks like there is. Look, it says, hey, Kira, I have a question right now. ES sweeping swing high on the daily time frame, but NQ is far away from it. So could we look for shorts right now? Yeah, let's take a look. So yes, finally has that level swept, it looks like. Okay, which is good. Let's double check where NQ is quickly. So here's the H4 level for NQ, and then it looks like the next key level on NQ in terms of the H4 is way up here. Let's go to the hourly for a sec. Maybe there's something there on the hourly, and there isn't. So you just have imbalances here, and this is the last level that's being swept. Okay, so let's just go to the 50-minute quickly. Okay, so that's the high that's been swept off New York session, and it's a similar thing. For me personally, I can't touch anything. Like, I wouldn't even be wanting to touch anything, even if it was in the kill zone. But even just as a trade, like, this is the last level that got swept for NQ. The next one that's available is way up here, 29,282. And like I said earlier, if ES sweeps a key level and NQ is nowhere near a key level that it swept, I'm not going to take that trade. Like, I wouldn't take it. So for me personally, I would say I wouldn't look for a short. Because I want to see, once again, I want to see NQ sweeping a key level and having good reaction, strong momentum, confirming the IFG, right? Now, if you're trading ES, it's a bit of a different story, right? Maybe you do want to take a short on something like this. But once again, I don't trade ES. ES has a different march, or a different, it beats to a different drum. My intuition that an experience that I've built is through NQ. So when I see how NQ moves, that makes sense to me. ES often I find doesn't do things that I think it should do, which means it's behaving outside of what, you know, my thought process is telling me. So it needs to be close to it, but shouldn't reach it. Then it's a better SMT. Yeah, I mean, like, there's SMT clearly here, right? Where is it? Right here? Here? No. Yeah. Turn this thing on. Yeah, right here. So this candle to this candle. Exactly. So, I mean, there is SMT, but where is your key level? I find often people are taking positions, and it doesn't matter what you're trading. If you don't have a key level that it's being swept on, then what are you doing? I had noticed a trade. Someone had taken a trade. I'm not going to call them out or anything, but they had taken a trade on ES, and it failed. I think it was this right here, because it was like a CISD trade, but the problem was that ES hadn't swept a key level, or wasn't located at anywhere key. So if it's not located at a key level, you're literally pattern trading, in my opinion, or you're using some sort of your gut instinct for sure. But, you know, where's the key level sweep? So daily time frame, swing high, aim to key level. No. I never said that. No, I never said that. Never said that. The daily can be a very key level, for sure. But you said, what did you say? ES is sweeping the swing high on the daily time frame. Okay, so let's see where that swing high is. This is ES on the right. So this is the swing high right here on the daily. So this H4 is actually a daily swing high. So I could switch it up and say it's a daily buy side liquidity level. Fine. Are you referring to this level? Look at this. Is this what you're talking about right here? This one? This level here? Yep. Well, okay, let's just mark this as a daily level. Okay, one sec. Let's just do that quickly. Not that one. Which one? This one up here? Maybe you can even just shout out the level, the number. $7630. Yeah, okay, so this level right here. So your question is, ES is, you said ES is sweeping the swing high on the daily time frame, but NQ is way far away from it, so could we look for shorts? Okay, so I misunderstood a bit of your question there. I'm going to just really tackle that now. Technically, ES has not swept any daily level except for this level at 7563.5, right? So your next statement you said is, oh, so it needs to be close to it but shouldn't reach it, then it's a better SMT. You know, the thing with these levels is it just depends on what you're looking for, okay? So, like I said, with NQ, if NQ doesn't sweep a level, I'm not going to take that trade. I don't care if it front runs it. I'm not going to take that trade. I would say the same thing with ES. If ES does not sweep that swing high, I'm not going to consider it. Okay? Now, here's the perspective I would use in terms of the NQ situation. If NQ sweeps that level, okay, let's say NQ sweeps that key level that we're looking for, right? Let's say it's this level here, and ES doesn't sweep its level, and it creates bearish SMT, right? That's good for me because NQ has already swept the level that I wanted it to sweep. So now if it forms that IFEG, I can take it, right? I don't care if ES sweeps it or not. ES just does the SMT. It just gives the SMT. That's all I care about. But if I'm trading ES, then I want to make sure ES sweeps that level. And that's just my personal preference, right? And if I was trading ES, then it wouldn't matter if NQ swept it or not because I'd be playing off that bearish SMT, right? Yeah, and I look for IFEGs. I'm an IFEG trader, an IFEG reversal trader. I'm still working on the continuation aspect. I'm trying to find better ways to be a part of things, and I'll explain to you why. When you see a trend like this, right, and price is obviously ripping through levels, you're looking for draws on liquidity to target, right? So, like, an example would be, let me show you. Let's go back here for a sec. Because I did see this setup and I was just documenting it. Okay, I was documenting it, but I wasn't like 100% about it. I wasn't 100% about it, but I was documenting it. And it's this right here. And I'll explain to you why. So, number one, when you're doing continuation-based IFEG trading, the drawn liquidity has to be imminent. It has to be literally so obvious that price is going there. That's when you got to take that continuation trade, in my opinion, for IFEGs. Okay, reversal or continuation, which one is better? Imran, that's a good question, man. That's a good question. I think it just depends on the trader, man. Like, it depends on who you are. You have to know yourself as a trader. You have to know what feels comfortable and what doesn't feel comfortable. For a long time, I tried to do both. I tried to, this was with like unicorns. I used to do continuation unicorns. I used to do reversal unicorns. And then I realized, like, I love trading the reversal. It just seems cleaner to me. I get confused with the continuation aspect. But then I realized maybe I'm not understanding the best way to take a continuation trade, right? Of course, we all know, right? Like, people say, trade with the trend. If you look at, like a T-Trade's fractal model, right? Where we look at, market maker models in the sense of like there's the C1, the C2, the C3, right? That reversal, consolidation, accumulation, manipulation, and then you want to trade distribution, right? That's trading continuation. Some people can trade that continuation very comfortably, okay? Me personally as a trader, I have not had success that way. And it does come harder to me. But this is why I'm trying to find ways to make it make sense to me. So I'll just kind of go through something I've been thinking about a lot, which is like if I see price, if I see price looking at London high, Asia high, previous daily high, how can I get in on this trade? Well, the first thing I have to look at is, has price moved off of a gap on the higher time frame? Okay, so you could say, is there an hourly gap? No. Is there a 50-minute gap? No. Is there a 5-minute gap? Yes. Okay. Step one. Good. We have a 5-minute gap. Okay. Perfect. Number two. Is there SMT forming inside of that gap? Let's turn on the SMT indicator. Boom. You have SMT forming inside of a higher time frame gap. Even better. The thing that gets into an issue for me now is, where do I take the IFEG trade if it sets up? Because if the SMT is forming here, right, and the IFEG isn't forming here, then is it still valid? Like, would I take that? Okay, so if you just look to the right, you'll notice that there is an IFEG right here. So I was watching this, and I was just doing it for documentation purposes. That's all I did it for. This drawn liquidity is so freaking obvious, and we're so close to it. Here's the IFEG setup. Even if you entered right here. Stop loss goes at the protected swing. You got a 52 and 3/4 point stop loss. Your target is, T1, T2, T3, maybe even T4, right? 2.91 R. Let's hit play. Price hits T1. Stop loss goes to break even. Price tags TP2. Move your stop loss maybe below this swing point here. Price hits TP3. You're fully out of the trade. So this is kind of something I was looking at today, and factors that I'm taking into consideration. But you got to understand, when you start adding too much to your plate, it overloads your thinking, it overloads your thought process, which means you're going to potentially make mistakes. So if I'm looking to take shorts from here, that's fine. If nothing sets up here, that's fine. If I'm looking to take a continuation-based trade from here with the idea that my targets are this, then I have to make sure I'm playing smart, right? Because now, if I'm in that continuation trade, I don't want to just flip and start taking shorts all of a sudden now, right? I want to ride that long to my targets. But this now requires your thought process to shift. So is one better than the other? I would say no. But can you trade both? 100% you can. You just have to be comfortable with it and understand what you're looking for and follow the principles that you have with a system that play out over and over again, right? Nothing's 100%, but if the probabilities are in your favor that it works, then that's good. And I already showed you my steps, right? Higher time frame gap. Is there SMT inside the gap? Where's the IFEG? Is it clean? It was. So the DEQ doesn't even matter at this point because it's a continuation trade, right? Now, don't worry about it being here because the price is up here. It pulled it up. But if we just go back to right here, you'll see where the DEQ is. DEQ is actually way down here. So it's a bit irrelevant because you're not trading you're trading in premium. That's fine. You're trading a continuation setup. But you want to take those setups when they're super close to draw liquidity. It's so obvious that it should be going there. That's what I'm talking about. So if you can kind of change your thought process as it's going on from the reversal aspect to the continuation side, this is what I would be doing. So I've been trying to put this together for myself to get more comfortable. This is something I'm reading. I wasn't going to talk about this, but since you asked about it, I thought it's a good way to put that out there. Harry says, not going to lie, I was so tunneled this morning that I didn't even notice that ES wasn't anywhere near on the higher time frame. Yeah, and I think you said that maybe that trader that took that CSD was you. So I apologize, man. I don't know if it was you or not, but if you did take that, then yeah, I mean, that's kind of what I was saying. It's really, really tricky. We always got to remember, because we are kind of we are ICT-based traders in a way because we're always looking for liquidity. You've also said you found smaller reversals that send you back into the higher time frame trend for continuation have been the most clear for me. I don't know if that makes sense. Yeah, right here. This is the perfect example of that. So it totally makes sense, right? This is how I would actually want to trade a continuation. I need to find confluence. So if I'm a reversal trader and I'm looking for a liquidity sweep, if I'm a continuation trader, well, I still need price to move into some sort of liquidity on the higher time frame, right? And it has to be aligned with the direction where I want it to go. So if I'm bullish, I need it to form inside of a bullish FEG or even potentially sweep a higher time frame bullish level. But typically, when price is moving aggressively in one direction, it's leaving behind those gaps. So that's why the gaps become more accessible or more available. And then if you can align SMT inside of that gap, then it becomes even more powerful. So that's like combining multiple confluences to structure a setup. But the key thing is the drawn liquidity. Okay? Imran says, but once 9:33 a.m. price formed an IFEG and below DEQ, sure there was a long at that moment, not NQ but ES. Is that today? Sorry, man. Was that today? Maybe I'm a little confused with what you asked. Apologize. Let's just take a look at ES quickly here on the right. Let me just do that. Okay, so 933. Okay, so you are talking about this. Yeah, and below the DEQ, and there was a long at that moment. Yeah, there was. Yep. Actually, let's just go back for a sec here. Okay, so this is what it looked like. So if the question is whether I would consider something like that, let's say this formula NQ, would I take something like this? You know, that's a good question. And it's a way to trade the DEQ, right? So what I mean by that is, here, let me see if I can, okay, let me show you what I mean. So, yeah, there it is. I know, this is exactly what you're talking about. So, okay. So the way I would trade the DEQ is in one of two ways, okay? So either you can go long or you can go short off of it. But what I want to see is price in this situation moving away from the DEQ and then spiking into it, okay? That's one way, right? I need to see that. I don't want to see it chopping. Like, I don't want to see chopping like this, right? I want to see a strong move in and a strong move out. So, whoops. So if I go to this setup right here, even though price ran below and swept these levels here, and then the setup forms around here, the problem I have with this right now on the 1 minute is it's not singular, right? So that's the flag 1. No matter what's happening with the DEQ, that's flag 1. So let's go to the 2 minute. 2 minute is still, like, I mean, the confirmation is way up here. I'm not sure I would have taken that personally. And then here's the 3 minute. So part of the problem is the size of these FEGs and the placement of these FEGs. So if you're taking it on the 1 minute, you know, you're gapping something like this, right? You're just stacking these. How big is this thing? So it's about 10 points. Oh, 9.25 points. Okay, so that's not too bad. The thing with the DEQ is you want to see price spike into it, and you want to see price V-shape the hell out of it if you're going to take it. So even though the long is forming in premium, that's how you would play the DEQ. It's a different type of a setup. It's not a reversal play. It's basically a support and resistance flip, right? And if you understand basic technical analysis, that's all this is. It's an SR flip. And then if we just hit play, it does exactly that, right? I even had the, actually, let me turn on my indicator here. It actually took it out for some reason. Let me just turn this setting to 1. So if you look at it, it's even showing you here, the indicator is even showing you the setup too, per how it would have calculated it. So to me, this is actually a valid play. If this had actually happened on NQ in that way, I would have probably taken it. And the reason being is that you got to go back to your criteria. Did we sweep higher time frame liquidity? Yes. Asia high, or sorry, Asia low, London low, both got swept. Perfect. Is there SMT? That's, if there's SMT, there's SMT. If there's no SMT, then that's fine. But is there SMT? It's showing that there is SMT here. Okay, so you got 3 levels or 3 pieces of confluence that are in your favor. You have the DEQ play. Does it reclaim that level with strong momentum and good, good force? Yes, it does. Right? Got 4 things now for you. Right? So, like, if that had happened with NQ, yeah, I would have probably taken it. You know what I mean? But once again, like, that's ES though. And because it's on ES, I wasn't going to touch it. But if it was NQ, I would have taken that because it's not chopping around the DEQ. The big issue would just be the distance, right? That would probably be my biggest problem with this setup. So if I were to go to the 2 minute, I personally probably would have waited for something like this. Let me turn off this SMT indicator for a sec. I would have probably waited for something like this. Let me just get rid of this daily level because it's not really valid. But there is a problem to this. You're sweeping an hourly level right as it confirms. Very dangerous, right? The key with these DEQ plays is that you want to try to take them, and you want to take those positions like as close to the DEQ as possible. You don't want to be taking it when it's like really, really super far away, especially when it's right next to the next level, which is the nearest drawn liquidity. And I was mentioning this earlier, right, with Alice when he was talking about those FEGs that get stacked, right, the non-singular setups, that moving your stop loss to break even the second the next drawn liquidity is hit. Well, guess what? If you entered here and you tag this drawn liquidity, you're already at break even, and you've already been taken out, if you were to kind of trade technically that way. So a lot of different things in there. To me, I just see a lot of flags. I didn't realize the hourly was here, and that's the thing, is like, this is why you always got to mark off your levels before you start trading, right? If your pair was ES, you must took that trade because of all the rules were followed. Well, just because rules are followed doesn't mean it's a good trade. You got to have some intuition in this, right? Nothing is 100% mechanical, in my opinion. Especially when it comes to ICT trading, I don't think you should be 100% mechanical. And once again, I would just say to you, even if I were to be 100% mechanical on this trade, let's say I entered right here for whatever reason. Let's say my stop loss is just about here, so 10 points. I'm looking for 1-to-1 R, right? About like that. My problem here is that the second the buy side liquidity on the hourly gets swept on the next candlestick, my stop loss has to get moved to break even. And the second my stop loss gets to move to break even, I get taken out. So that's technically how, if I were to think of it in a mechanical way, how I would have played it, how I would have managed the risk, and then I would have had to sit back and watch this, right? Like, and that sucks. That really sucks. So I wouldn't say this is the most ideal setup, okay? But that's how I would have taken it. So I hope that makes some sense. Anyone else have any questions? Hey, no problem, no problem. Anyone else have any questions? Because I think we are... Yeah, price just keeps grinding higher, right? Remember what I was telling you about NQ? NQ is in the middle of nowhere. Where are those levels? Oh, I took them out. So today's 100% a trend day. Tracy just took a short, exited, YM. How is YM? How do you find the price action on YM? Yeah, right there. Boom, daily EQ. Well done. Yeah, and it's crazy too because YM is doing the complete opposite. Yeah, it has a mind of its own. Look at this. It's going in the opposite direction of NQ. Holy crap. That's so funny. That is so funny. Yeah. How do you find it? So Tracy, how do you find it hold up with the key levels that, you know, I use? Previous day high, previous daily low, Asia high, Asia low, or overnight session highs and lows, H1, H4 levels. How do you find it fares up with those levels, in your opinion, since you're trading it? Let's take a quick look at this, and then I think we'll end. So here's the 6 o'clock candle. Let's just mark this. Let's see something. H4 here. You got the FEG there. Let's go to the hourly. There's another level here. Another level there. 15. Yeah, so I mean, overnight sessions were taken out. Previous day high is over here, so that means the low is way down there. So this is just entering higher levels of interest. So yeah, definitely looking for shorts today on YM. So if we go to the New York session, let's see what happens. So, oh, this is tricky. Wow. Yeah, this is tricky because it already took out those levels of interest pre-market. So let's get rid of that. Let's get rid of that. Just starting to trade it with consistency, so I'm learning it. I do get frustrated when I pay too much attention to ES and Q because it gives me FOMO if doing something opposite. It's good awareness for you to say that, you know. It's really good that you're able to understand some of the challenges that you have in that regard. PM session 1:30 to 3. New York PM, yeah, 1:30 to 3. Pretty decent time to trade the New York PM kill zone if you want to. Me personally, I'm not. I'm gonna log off soon and go on with my day, hang out with my kids. I just want to see one thing though with YM. So I'm always interested in charts and stuff. So I just want to see. Oh yeah, so that wasn't even an hourly level. So quick question, Tracy. What level, like what higher time frame liquidity level did you use to take the trade? Like how did you put it together? I'm just curious. Was it the 15-minute? Or was it that FEG that price tapped into on the 4-hour? Was it 1 hour? It's both. Just kind of gonna map this. I just want to see for myself. Hey, thanks, Harry. Take care, brother. Yes, I'm happy to be back. Like I said, I'm gonna be back to the regular schedule. The days might change, maybe, but yeah, just expect it twice a week for me for the month, for sure. Looking for IFEG entry and confirmation with IFEG Pro indicator for entry. If it also confirms a unicorn, I might hold longer. Okay. I think if you use that 50-minute level, then I mean I can see how that makes sense, right? You have it's forming inside of the H4 bearish FEG. Use a 50-minute level, and the reason I'm saying that is that if you're looking at it from a position of, you know, if we look at how like MAT forms bias, right, using higher time frame levels, H4 is bearish. You're at an H4 bearish FEG. 15-minute has the sweep. So if you have a bearish bias and then the 50-minute market structure aligns with that bias, well, your setup's right here. I mean, even if it's a unicorn. If it's a unicorn, you know, you probably want to use something. You could probably use something like this. I also cheat a little bit with my breaker blocks. I'm not going to lie to you guys. I'm not so meticulous about it. I'm more about kind of using it more in terms of, like, say, like an order block range, more so than, you know, the series of candles, like to the nitty gritty. So I would kind of do something like this. But yeah, I mean, you got the FEG there. Price, does it close? Yeah, it closes right here and then front runs it by like a point or two. But if you're trading the IFEG though, and there's nothing wrong with aligning the model this way, but you know, you probably do something like this. Now, the problem, once again, with something like this is just this chop here, right? But the thing is, and I'll say this as a tip, this is something I look for. If I start seeing chop forming inside of the IFEG, obviously I don't like that. That means the only way I really will even consider taking this trade is if price maintains respect without breaking back above the IFEG high here, right? That gap we're using. So in this case, it's respecting it. But the other thing is I need to see strong displacement, which you get right here. So seeing that is a very good sign of why I would still take it even though it's choppy. The next thing to consider, though, is you have a drawn liquidity here, right? There's an FEG inside here. So basically what that's saying is the second price starts to sweep into this zone, if you took this trade, you got to move your stop loss to break even, because you don't know if price will reverse from here. In this situation, it actually flips it. It inverses this gap, and then flips it into resistance, and then goes the other way too, right? So actually not a bad read in terms of like how prices move in there. It's pretty flowful, pretty good. And yeah, if you're someone that trades YM and it makes sense, then yeah, definitely. I mean, this looks pretty good. I know one thing I've seen with YM is it has very volatile ups and downs, and it does have a mind of its own, exactly like Tracy said. So, so looking for IVG entry confirmation with. Okay, so we talked about that. 1 minute entry, 5 minute or 50-minute liquidity. Move the stop to break even when it gets to 1R. Yeah, I mean, you crushed that trade. Look at how far it went. Damn, that's an impressive trade. I mean, even if you, I mean, say you entered here and your stop loss, let's just say your stop loss was about right there, right? So 79 points. Here's 1R, right? So 1R is about here. Stop loss to break even. For someone like me, I like to just trade 1R, so I would have been out of this trade like right here. But this thing actually went all the way, like this could have been like TP1, TP2, TP3, something like that maybe. But I mean, this thing ran almost 2. Actually, this did run 2.5R. Wow. Sick trade. Well done. All right, well, let's go back to the whiteboard just to make sure I haven't covered everything. So we talked about the open, we talked about singular setups and non-singular setups, we talked about the DEQ today, and we talked about correlation between NQ and ES. So we did cover everything I wanted to talk about today that I saw. Yeah, I appreciate you guys all popping by. GC and silver have what you explained in daily EQ. Okay, let's take a look. GC. And let's change this to SIL. Actually, let's go to SI. Ah, indeed. Exactly. That's exactly right. You can see the difference, right? So NQ was doing this earlier today, and ES was doing exactly what SI is doing here. So interesting. It's funny how price have a lot of like similar signatures, with things they do. But the reality is, it's just our interpretation of how we look at the data, right? And knowing what to look for, if that is something that you want to look for, right? So for me, I look at the daily EQ. I look to see the correlation between the two assets involved, right? So NQES or GC and SI. If you're trading CL would be with RB, right? Gas. I think even hot oil, HO, also with CL from my old experience with it. But yeah, no, for sure, this is a really good example. Good eyes there, M4K. Good eyes. So what does this mean? It just basically means, like I said with that ES thing, right? Like if silver can continue to hold the position here, it could presumably push higher to London high, and it might pull NQ. It might pull GC up higher to the DEQ. That could be a target, right? But I can't say for sure if that'll happen because I don't trade these two, so I haven't studied these two in those regards. I just study ES and NQ and just know that those two have that type of relationship. I don't know if these two will have that relationship, but that's kind of how my thought process would have been. So silver swept daily ERL. Yeah. Oh, you know what? That's a really good point to make, Tracy, is that so that thing bounced one tick off the before the daily EQ, right? So the thing with that level is never look at that level as like a line in the sand, like hard line in the sand, like how we would look at like an ERL, right? Where we want to make sure it sweeps. The daily EQ does not operate like that, and it doesn't have to. So you did the right thing. You got close to it. Take the profit off. Like, beautiful trade. Beautiful move. So now silver, you said swept a daily level. Wow, that's a lot of chop, man. That's a lot of chop. That's a lot of chop. How do you even make sense of that? My question to you would be this: how can you trust the sweep that's happening in this cluster? I'm not saying technically there's no sweep, but I'm just saying how would you trust that? With GC? Yeah, but what I'm saying is like how can you trust the level given the amount of chop that's happening, even though there's SMT? But SMT is formed best when you have like very clear swing points, right? So let's see. Yeah, FVG, sure, okay. Yeah, I mean, I know there's an FVG here. So, and I'm not saying I'm right by saying what I'm saying. I'm just challenging what you're showing me just to see what you think, because I'm just curious. I know for me personally, one problem I used to have with higher time frame daily buys is when price would get into a chop fest like this. I would often do something like this where I'd say, well, you know, it has swept this level. But the problem with that is that you have a very defined level here. And I kind of always have Dodgy's messaging in my head. Dodgy always talks about how, I used to laugh, but he says this in his videos where if he were to move like 20 feet away from his desk, I'm just saying 20 feet, but if he were to move really far away from his desk, would he be able to see this swing point? Because he says if you can't even see the swing point, then you shouldn't even use it. Which means that if I were to move all the way back, you know, where I'm sitting, I wouldn't be able to see this, but I would definitely be able to see that. So what the point of the story here is, it might make more sense no matter what you're seeing with FEGs or SMTs, and this is just my thought process. I'm not telling you what to do, man. Not by any means. But I would just personally wait for something clear. Like, I would rather see this get swept and, you know, 100%, you know that's a sweep, right? Whereas with this, it has swept it right here for sure. And maybe there is a lower time frame play to be had for sure. Maybe there is. But it's just preference, right? Because you just don't know if price will re-sweep because it's chopping. So right here is 9 o'clock. You get that same level swept. Let's go to the 5 minute. What does that look like? So you're getting a move up. Big gap here though. No real liquidity sweep. Hard to say if there's a CISD here. I don't know. This to me doesn't look like a CISD. Some people might say it is because of maybe this being the sweep. And then this being the CISD, maybe. And like I said, you know, I'm an IFEG trader, not a CISD trader. So if there is any CISD traders here that want to confirm that, go ahead. I see the same thing. Daily SMT that isn't clear. We still have relative equal lows. Then GCS bearish SMT with the FEG and SIL disrespected. So it's best to sit out with so much contradiction info. Man, right there, that is a very valuable thing you just said. Contradicting information. We all know an A+ setup does not have contradicting info. And it's not to say this, you know, if a setup forms like this and it has contradicting info, it might not work. That's not what we're talking about. We're talking about if we're trying to put ourselves into the highest probability setups, which are A+ setups, don't have contradicting information. Now, this is where some trading intuition has to come in, and your own personal risk, of course. But for someone like me, if I start to even remotely see that I have contradicting info, then that means I'm potentially breaking rules to what I have defined as my system, and it means that I should sit out, right? And today I showed you guys so many examples of non-singular IFEG setups that, you know, I could have taken, and it's a good thing I didn't, because I would have got, you know, stop lost. And I just followed my rules, right? Because there's contradicting info to what I have planned. So I think you raise a really good point there with what you said. That might be the information you need to tell you what to do. And like I said, it's not to say price will execute that trade properly, like it'll go to wherever you think it's going to go. It's just about knowing when to execute and when to just maybe execute with an eval, right? Maybe that's an eval based trade. Lower probability, move to eval. Higher probability, move to funded. That's a really good way to offset your FOMO, in my opinion. If you're able to afford it, and of course do it, right? Because, you know, these things cost money. All right, folks. Well, I really appreciate your time today. It's my first one back in a while. If you want to support me with any indicators I use, just hit the link in my bio. It'll take you here. If you want to join premium groups, you can through my links. The affiliate stuff, you know how that rolls. It helps me out. But yeah, these are the things that I recommend, that I'm a part of, I believe in, I think are solid. I've used all of these guys and all of these tools. You'll notice I don't have any sort of prop firms on here. It's just, I don't know. That's a whole different game. But 100%, I've used all of these things. I've been in, I'm obviously with AshCap, part of the team. I've really studied a lot from Tempo with IFVGs. His premium is really good, and he just released a free IFVG course, which was always free through WAP, but he put it on YouTube. Honestly, if you trade IFVGs, that is the best course you could watch. He put it all there. It's like 5 hours. That is the best one to watch. I'm also part of a crypto group that I've been in for since 2020 or something like that. And then of course you guys all know me with the 2 degrees IFVG Pro Plus indicator. And then I also got TradeSyncer and TradeCopia because I will tell you, I prefer TradeCopia over TradeSyncer. Tracy, if you click my profile, like my name, the link is in my bio there, and then it'll take you straight here. What I was saying with TradeCopia, yeah, no problem, is TradeCopia has that standalone software-based application that's on your laptop or your computer, meaning you can only use it on that computer. It's not cloud-based. TradeSyncer is cloud-based, so you can go anywhere you want on any computer, and you can log into TradeSyncer and copy trade. The thing for me is my preference is with TradeCopia. I've just found it has less slippage and overall. TradeSyncer has made updates and improved. I will say they have improved from when I first started using them, but I've had to actually stop using TradeCopia and move to TradeSyncer, not because I want to, because I have to, because 3 days a week I'm in an office and I'm trading off of a different computer, and I can't have TradeCopia on those computers, obviously. So and I don't want to lug around my laptop, so this is why I have TradeSyncer, for that reason. But yeah, anyways, if you'd like to support me, here you go. I really appreciate everyone's time today. Thanks for sticking around. Hope you all had a blessed weekend. And I'll be back on Wednesday, same time, 12 p.m. And we'll see what the market gives us between now and then. Peace out, folks. BC, thanks, brother. Peace out. God bless, guys.